Face value, obviously, it's softer than the market expected. We're looking at 0.4% growth. So we've had a couple of quarters now where growth has been pretty subdued, running at a below trend pace of just under 2%. And this, just confirms that the Australian economy at the moment is in the slow lane. We'll need to look at the details. I did note that the consumer spending was up about 0.4%. So that was another pretty subdued result. So there may be some special factors behind the slight miss overall. The consumption numbers were a bit softer than expected, but not too much. I think the mark was at 0.5. So the miss will be in some of the other areas.
All right. So as we wait for more breakdown to roll out over the wires, let's look ahead and talk to us about what this potentially could mean for the RBA, which obviously paused, but a lot of people are saying it was a hawkish pause, and I think that was reflected in the commentary and the rhetoric as well, and that potentially we could be, maybe even should be, starting to price at least another hike down the road. What do you think?
Look, there's still a risk that the RBA's got, more rate rises to come. I think today's number just confirms, at least to the RBA, that the economy is still sluggish, or particularly consumer spending. And they do want to see continued weakness of consumer spending to help keep downward pressure on prices, price inflation. So it's a tick in the right direction in terms of the RBA not needing to do more. But we do get very important consumer price index information in late January, just ahead of the next RBA meeting in February. And that's going to be the make or break in terms of whether we get another rate rise early next year. And on balance, I don't think they will do more. But if that CPI, if the consumer price index in late January surprises on the upside, suggests that the pace of disinflation is not as quick as we would like, I think they will go again in February. But it's not my base case.
Okay, we'll keep an eye out for our January sticker prices down under coming up in just a bit. I want to ask you, though, David, in terms of the currency, right now we're doing about 65 or thereabouts. Is that a level you think the RBA is comfortable with or not?
I think they're pretty. I think they would be more, not comfortable if it was still wallowing in the low 60s or even weaker. So I think the rebound that we've seen in the Aussie dollar in recent weeks on the back of a weakening US dollar, again, is some comfort to the RBA. It does lessen the imported inflation risk, I think, in Australia. And I guess, at the moment, the RBA is relatively more hawkish than the Fed. I mean, we're still talking about potentially further rate rises. I mean, the Fed is kind of as well, but I think the debate in the US has shifted on to when will they cut rates, whereas in Australia we're still debating, do we need further rate rises? And so that's supporting the Aussie dollar. So RBA is comfortable, and I think over the next 3 to 6 months the Aussie dollar will strengthen further, which will again help at least lessen the imported price risks in Australia.